If you just glance at the headlines, the US economy looks like it's absolutely crushing it. The stock market is at all-time highs, inflation is supposedly cooling off, and people are spending money. But what if I told you that underneath all that good news, something pretty troubling is brewing? Okay, let's get into it. Yeah, while the headlines are poppin' champagne, there's this quiet credit crisis building up, like right under our feet. It turns out that all this so-called growth might just be fueled by a massive, and I mean massive, consumer debt problem that almost nobody is talking about. And this right here shows you the massive disconnect. The headlines are all sunshine and rainbows, right? Stock market's up, inflation's down, but the reality? That's a whole different story. We're talking record household debt, record credit card debt, and more people are falling behind on their payments. And look, this isn't just about spreadsheets and charts. This is about the real financial health of millions of American families. So what's going on here? Well, the problem is really hitting us on two different fronts. We hear a ton about the national debt, right? It's always in the news. But what's wild is that there's this parallel crisis happening in our own homes. It's like American households are basically mirroring the government's spending habits. Okay, just take a look at the sheer scale of this. The numbers are staggering. The national debt has blown past $38 trillion. And get this, we're now spending $1 trillion a year just on the interest payments. That's insane. And then you look at household debt, it's hit a record $18.6 trillion. It's literally exploded by 60% in just the last decade. One of the sources we looked at put it this way, and I think it's just a perfect analogy. It really suggests that from the government all the way down to our own kitchen tables, borrowing isn't just some financial tool we use every now and then. It's become the very thing holding the whole system together. Okay, so to really get our heads around this household debt crisis, we've got to understand something crucial. Not all debt is the same. So we're going to borrow a framework from a classic Clint Eastwood movie. We're going to break this down into the good, the bad, and the ugly. All right, let's kick things off with the good debt. Now, this is overwhelmingly housing debt, and it's considered good for a pretty simple reason. It's usually backed by a real, tangible asset, your house. And this chart really shows you just how big of a piece of the pie this is. Mortgages make up the lion's share of all household debt, a whopping $13 trillion. Well, for a lot of people, it's that huge monthly payment you make just to have a roof over your head. Okay, but there is one little thing here that makes you go, These things called home equity lines of credit, or HELOCs, think of them like a credit card that uses your house as collateral. They've jumped over 30% since 2021. That's the fastest we've seen since right before the 2008 crash. But, and this is a big but, the total amount is still pretty small in the grand scheme of things. So for now, we're keeping housing debt here in the good column. All right, now let's move on to the bad debt. And this is where the story starts to get a lot more concerning. We're talking about all the debt that isn't tied to a house, starting with, you guessed it, America's favorite rite of passage into crippling anxiety, student loans. The total, a mind-boggling $1.7 trillion. So how did we even get here? Well, a huge part of it is that college tuition has just skyrocketed. We're talking over 700% since 1983. That's way faster than inflation, and it's definitely way faster than most people's paychecks have gone up. You get caught in this brutal cycle where colleges keep hiking prices and students are basically forced to take on more and more debt just to get a degree. And this is where you can really see the stress building. Just look at this. A year ago, fewer than 1% of borrowers were seriously behind on their payments. That means 90 days late or more. Today, that number has skyrocketed to over 9%. That's a huge jump. So what makes this debt so uniquely bad? Well, it's because you just can't escape it. This quote we found is pretty blunt, but man, does it hit the nail on the head. Unlike a car or a house, you can't just sell your degree if you can't afford the payments. And this is one of the few types of debt that usually sticks with you even if you declare bankruptcy. It just doesn't go away. And that brings us to our last category, the ugly. And honestly, ugly might not even be a strong enough word for this. This is where things get really, really dangerous. We're talking about credit card debt. Just look at how fast this has spun out of control. Credit card balances just blew past $1 trillion for the first time in history. And to put that into perspective for you, Americans have racked up more credit card debt in just the last 4 years than they did in the entire 10-year period after the 2008 financial crisis. Think about that. And this is where the wheels are really starting to come off. The percentage of people who are seriously delinquent on their credit cards has now climbed over 12%. What's so alarming about that number is that it's the highest level we've seen since the absolute peak of the 2008 financial crisis. The red lights are definitely flashing. And then, as if that wasn't bad enough, there's this. The average interest rate on a credit card is now over 21%. That's another record high. And look, this isn't just people buying fancy TVs. With the cost of everyday stuff like groceries and gas going up, more and more people are just using credit cards to survive, to bridge that gap until the next paycheck. So for that 12% of people who are behind, they're not just falling behind, they are literally drowning in compounding interest on things they needed just to get by. So you'd think things couldn't get much crazier, right? Well, a new player has entered the game, and it's making it easier than ever to fall into these debt traps. I'm sure you've seen it everywhere you shop online. Buy now, pay later. But let's be real about what this is. This isn't some brilliant new financial tool. It's just old-fashioned credit with a brand new, slick marketing campaign. It's credit disguised as convenience, and it's basically training a whole new generation to see debt as a normal, everyday thing. And the traps here is just brilliantly simple, and that's what makes it so effective. You see something you want, you click one button to pay in 4 easy installments, and bam, instant gratification. It completely removes that little sting you feel when you spend money, making it dangerously easy to spend money you don't actually have. And of course, the data is starting to show the fallout from this. About 15% of Americans have used one of these services this year. But get this, a shocking 40% of them ended up regretting it. And maybe that's because almost a quarter of all users have already made a late payment. It's the same old debt trap, just wrapped up in a prettier package. So, when you step back and look at the whole economy through this lens, through the lens of debt, the picture looks totally different, doesn't it? This quote really sums up the feeling. All those headlines about a booming stock market and strong consumer spending, they're all being propped up by borrowed money. It really is like a giant game of musical chairs. And that right there is the heart of the problem. For more and more people, debt isn't about buying luxuries anymore. It's about financing survival. It's putting rent, gas, and groceries on a payment plan. And that's what's so insidious about this whole thing. It's not a big, loud crash. It's a quiet, gradual crisis that's happening right out in the open. So yeah, on the surface, things might look okay. But the foundation of our economy is starting to show some serious cracks. And all of this leaves us with one huge, unavoidable question to think about. If our entire economy is built on this mountain of debt, what in the world happens when the bill finally comes due?